In the last session, we have solved the working notes problem number 29. In this session, we will complete problem number 29 by preparing the ledger accounts and the balance sheet. As per the balance sheet, first on the liability side, what we have is capital. Capital is a liability. Let us credit that in capital account. By balance brought down. Ajay's capital 20,000, Vijay's capital 20,000. Immediately below the capitals, what we have is creditors of rupees 10,000. Creditors is a liability, but do we have any account of creditors? No. Direct in the balance sheet. We'll record creditors as 10,000. Below creditors, general reserve, 10,000 rupees again. Note number 1 is done in the last session. Distribution 3:2, 6,000, 4,000. When you transfer reserve to the partners, when you transfer reserve to the capital account, capital balance will increase. Increase in capital is increase in liability. Increase in liability we credit. So we'll show it here as by general reserve 6,000 and 4,000. That's all with the liabilities assets. The very first what we have is machinery. We don't have machinery account open, so let us record that in the balance sheet. But remember, when you record any asset in the balance sheet, leave one line. If there is any goodwill balance, we can record it here. So after leaving a line, we'll show machinery at its book value 16,000. It has adjustment, so a line will be left to get the adjustment done. After that, investments of rupees 6,000. Investment is again asset in the balance sheet at its book value 6,000. On investment also we have some appreciation. So in the inner column, stock 14,000. There is no adjustment on stock. So let us take up stock direct in the outer column. Rupees 14,000. Then debtors. Debtors has some provision for bad debts. So we have to minus that. So debtors in the inner column. It's asset. Debtors. Rupees 13,000. We'll leave one line so that we can deduct provision for bad debts. Cash is an asset. Do we have cash account? Yes. So don't record direct in the balance sheet. Take it in cash account. As to balance brought down rupees 1,000. The last item on the asset side is profit and loss, which note number 2 we have done, and the distribution comes to 6 and 4. When you transfer profit to capital, your capital account will increase. But when you transfer loss to capital account, your capital account will decrease. Decrease in capital is decrease in liability. We debit. So capital accounts we debit by to profit and loss account into bracket loss. As per note 2, the distribution is 6,000 and 4,000. That's all with the balance sheet. Now the adjustments. On the above date 1/4/18, Sanjay is admitted on the following terms. The very first adjustment what is given, Sanjay is to bring 4,000 as goodwill. We have seen note number 3. He has brought in goodwill 4,000. An entire share is sacrificed by Ajay. So first we'll pass the entry for cash brought in for goodwill. What the entry says, cash brought in, cash account debit. Cash account debit side. Brought in for what purpose? Goodwill. To goodwill account, rupees 4,000. Now we'll transfer that to goodwill account. Goodwill account on the credit by cash account, rupees 4,000. Usually we distribute this cash brought in by new partner for goodwill among the old partners in sacrifice ratio. And that is what in note number 3 we have seen already. Ajay is the only partner who has sacrificed 1/5 share to Sanjay. What is Sanjay's full share is sacrificed only by Ajay. So what goodwill is brought in by Sanjay cannot be shared by Vijay, will be shared only by Ajay. So what the entry will be? Goodwill account debit not to both the old partners, only to Ajay's capital account. Goodwill account on the debit side. 2. Ajay's capital account. And this is what in the last session, note number 3 we have done already. Transfer it to Ajay's account by goodwill account. In the column of Ajay, 4,000. Next adjustment. Machinery and investments new values are given. For that purpose, we have prepared the working notes. Machinery new value is 20,000. What is the book value? 16. Increase by 4. Seen in the adjustments. Seen in the working notes. Appreciation 4,000. Appreciation is the income. Revaluation account on the credit side by machinery account or just by machinery 4,000. Machinery appreciation will increase the value of machinery. Enter that in the balance sheet. We add it to machinery 4,000. So machinery in the outer column what we get is 20,000 rupees. Same adjustments give the new value of investments 8,000. Book value is 6, new value is 8. As per the working note, we got the appreciation as 2,000. Appreciation is the income by investments or investments account, rupees 2,000. Appreciation will increase the value of asset. Let us add it to investments. Add 2,000. In the outer column, what we get is 8,000. Next adjustment, provision for bad debts to be maintained on debtors, rupees 1,000. Amount is given, so working note is not done. Bad debts, it's a loss. Losses, revaluation account debit side, rupees 1,000. Bad debts will decrease the value of debtors. Let us minus it from debtors. Less PBD, provision for bad debts, rupees 1,000. In the outer column, what you get is 12,000 rupees. Next adjustment. Sanjay, the new partner, has to bring in 25,000 for capital. He has brought in cash for capital. What is the entry? Cash brought in by Sanjay. Cash account debit to Sanjay's capital account. Cash account debit side. To Sanjay's capital account. How much cash he has brought in? 25,000. Transfer it to his capital account by cash account. Brought in by Sanjay, 25,000. Next, this is the new adjustment what we are learning. The capital of each of the old partners must be equal to that of Sanjay. That means, when you take up capitals in the balance sheet, Ajay, Vijay, Sanjay, that should be equal to Sanjay's capital. 1 minute, just have a look here. When we record capital, we record it this way: Ajay, Vijay and Sanjay. Sanjay's capital is 25,000. What he has brought in. What the problem says, Ajay and Vijay's capital must be also equal to Sanjay. That means Ajay's capital must be 25,000. Vijay's capital must be 25,000. Total capital must be 75,000. If you can remember, in the last sessions, in the last problems that we have done, from where we get this capital? We get it from the partner's capital. Partner's capital account, when you balance here at the end, when you balance, we get a balance. We get some balance after minusing. That balance we take here as the capital. Now, the reverse way, this balance we know. How much is the balance? It has to be 25,000 each. That means the capital, what we have taken here, should be the balance here. It should be 25,000 each. I repeat, Sanjay's capital is 25,000. As mentioned, Ajay and Vijay should be equal. It should be 75,000. From where we take these capitals in the balance sheet? From the capital account, what balance we get? What balance we get, we take as capitals. In this problem, we know the capitals already. And that is the reason that capitals has to be the balance. This is the only adjustment. See that further what is mentioned. Now, when you balance, you will get some difference. What is to be done with that difference? See what is mentioned in the adjustments? It is mentioned that it must be transferred to current account in their respective names. So, when you balance that, we'll see how to take the balance. That's all with all the transactions. First, we'll balance revaluation, then capital, and then remaining accounts. Revaluation. Credit side, 6,000 is more. 6 minus 1, 5,000. Credit balance is a profit that we distribute among partners' capital. What we get is 3,000 and 2,000. That's 5,000 into bracket profit. We'll transfer this to their partners' capital account. Partners account. By which account we are transferring? Revaluation account. Let us transfer 3,000 and 2,000. This is nothing but the profit that we have transferred. Now let us balance partners capital account. Be careful, here whatever balance we get should be transferred to current account. Because what capital balance is there already we know. Let's see. Let us balance Ajay's account. Check out the credit side total. 26, 30 and 33,000. This is 31,000. That means your credit side total is more, which we get as 33,000. We write it down both the sides. 33 minus this, what balance we get is 2,000. What is mentioned? We should transfer to which account? Current account. So this will be transferred to partners current account. We can specify this as balancing figure. So you'll understand that that is not given in the problem that we have found out. Now let us balance Vijay's account. 20 and 4, 24, 20 and this 2, 26,000. 4 and 25, debit side is more, 29,000. The total that is more right on both the sides. 29 minus this, 26,000. What balance we get is 3,000 rupees when you minus. Whatever balance we get, we transfer it to partners current account into bracket balancing figure. Now, Sanjay's account. Credit side total is 25,000. Same is on the debit side. So, Sanjay's account won't show any balance. Now the question is, where this is to be transferred in the balance sheet? Simple. In the balance sheet, we know assets means debit balance. Liabilities means credit balance. What is this 2,000? Debit balance or credit balance? Credit side total is more. So that has to be the credit balance. Credit balance means that is nothing but a liability. Here, we'll enter it as Ajay's current account. Ajay's current account shows a credit balance. I repeat, credit balance is a liability. Debit balances are the assets. Ajay's account, credit side is more, credit balance. Vijay, debit side total is more. So that's going to be a debit balance. Debit balance means what? Asset or liability? Debit balance is asset. So we'll transfer it here on the asset side. Rupees 3,000. After this comes his cash account. Let us balance cash. The total of cash account 1 plus 4 plus 25 comes to 30,000. We'll write it on both the sides. 30, we have nothing to minus. So we get a balance of 30,000 rupees. We'll take it as buy balance carried down. Carried down where? To the balance sheet. Cash. Rupees 30,000. Let us balance goodwill account. Debit side total 4,000. Credit side total 4,000. Does goodwill account shows any balance? No, it is not to be taken in the balance sheet. That's all. When you total the balance sheet, it tallies. Let's see the total of the liabilities. 10 plus 75 plus 2, 87,000. Asset side. 20 plus 8, 28 plus 14 is 42. 42 plus 12 is 54. 54 plus 3, 57 plus 30, 87,000. That's all. This is how the entire problem has been done. In this session, we have completed problem number 29. In the next session, we'll start with problem number 30. Thank you.